All right. What is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about TLT and really what happened. I've got a video dedicated to TLT and really, what's going on with interest rates around the globe right now. Global interest rates, all right, lots of interesting stuff happening in Japan right now. And I think that that is a factor in this really, really massive red day that we saw in TLT. Got a little bit of a bounce back on Friday. We'll go ahead and break down this chart very detailed for you guys. But before we get any further on TLT, there's lots of important stuff that I want to go over. We're seeing signs of a risk off market. I'm going to break that down for you guys and show you where some of the money may be rotating to, right? We're going to look at the financials versus tech. We're going to look at the financials versus the market. And then we'll take a look at energy as well, energy versus the S&P versus the market. And then also energy versus XLK. A lot of these charts, these energy charts, I've showed these in the past, and they are pulling back now. And some of these patterns are looking like they're playing out. Okay, we forecasted a potential cup and handle forming on the energy versus tech chart, as well as we're looking for this next 5-wave push to the upside on the energy versus the market chart as well. So lots of good stuff we'll break down in today's video. We're also going to use today's sponsor, Simply Wall Street. It's a really great platform. All right, there's a 14-day free trial in the link in the description. All right, you got nothing to lose. All right, it's an awesome platform that I think you guys will enjoy. Okay, we'll go head on over to their website. They also have a really great app, and we'll go ahead and take a look at some of the valuations in the market, and then we'll dive into the valuations of energy and financials and take a look at those sectors. And you guys can do your own research and use the platform Simply Wall Street to look up some specific stocks maybe that you'd be interested in, maybe in the energy or the financial sector, or whatever stock you would like to look up. You guys will see it's an awesome platform. You can also email me anytime, zackleytrades@gmail.com, and we can work on doing a coaching session. All right, I do those one-on-one personal sessions every single week, and we can work on getting a time scheduled. All right. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, if we move forward, why am I saying that we're seeing signs of a risk-off market? Well, if we take a look here, what we have in orange is going to be our S&P 500. Then we've got XLY divided by XLP. So this is consumer discretionary versus consumer staples. And then we've got XBI here, which is going to be the biotech sector. Now, the biotech sector, to me, is the most risk on basically sector that there is, right? It's the most amount of risk. It's the riskiest asset class, in my opinion. Okay, so when you see this start to go up, the market's favoring more of a risk-on environment, and when you start to see that go down, the market's favoring less of a risk-on environment and leaning towards risk-off. XLY divided by XLP. When this goes down, okay, you're seeing investors generally go towards more staples, which is defensive, and which is obviously going to be risk off, okay? And you can see that through the bear market, XLY divided by XLP was going down, meaning that the staples were outperforming consumer discretionaries. And what we see here is we've seen a sharp sell-off here in the discretionary versus staples. So in the XLY XLP ratio chart, we see that we have this big drop right here. We see that over here in the XBI also has been making lower highs, but the market has continued to climb higher. Now, one reason for this, in my opinion, is due to a lot of earnings beats. As of now, about 68% of the stocks that have reported earnings in Q2 or their Q2 earnings, they have beat. So we are seeing the majority, almost 70% of stocks beating their earnings. And we're seeing lots of positive reactions in the market. This earnings season is about to start coming to an end. We still have lots of big names to report. Okay, we have Apple, we have Amazon, many more. So definitely you want to pay attention to those. But I do think that, once this earnings season is over, I think that we could start to see a pullback in the market and perhaps a rotation into some other sectors, right? Outside of tech. Tech has largely been leading this massive rally that we've had in the market. And what I'm seeing behind the scenes, right? Some of the internals of the market, even though the market's going up still, it's starting to go a little bit risk off, right? And we're starting to see that. So if we want to look at some other sectors, we have XLF divided by XLK right here. So this is going to be your financials versus tech. Now, the big question here is, was this a failed breakout? Or, is this a failed breakdown right here? Or are we really going to get the move down? Okay, you can see we have our support levels here that we were testing back in the past. All right, and what do? We flip that to resistance. Okay, we flipped it to resistance now, a little bit of a double top here. And now we're wondering, is this a failed breakout to the downside? And we're actually going to get a move back up in the XLF in the financial versus tech chart. One reason I think that that may be a possibility, look at our MACD right here. We've got a bullish divergence going, and we've also got a bullish divergence here on the RSI. So we're building a lot of strength and momentum here. And we just haven't really seen the follow through yet on the financials versus tech. And so that's something that I think we could end up getting here as, we're starting to see behind the scenes a little bit of momentum and strength building here. And that could potentially result in this chart going up. When you take a look at the XLF versus the SPY, so financials versus the market, all right, you see we have our range here. We tested it 3 times as support. Old support becomes new resistance. It is resistance right here. We flipped and dropped through that level during the market crash, during the financial, bank crisis that we had. And we're starting to show signs of bottoming out here. We've got a nice round of bottom forming, and potentially we would look to be, retesting this area up here that we've already tested. Now, there's some questions because we've already seen that big breakdown. Does this continue to go lower? Well, when we're looking here, all right, at our MACD and our RSI, again, we're seeing some bullish divergence forming, right? We're building a little bit of momentum. And look at what happened in the past when this happened, right? Bullish divergence over here, bullish divergence over here. Meanwhile, price action is going down. And then we saw that big rotation into energy. Or I'm sorry, into financials. This is the financial sector, XLF. So, this right here is a scenario that I think could happen again, right? Where we're seeing the price go down. If you're not familiar with divergences, we're making lower lows here, but we're making higher lows on our MACD and higher lows on our RSI. That's a simple term known as bullish divergence, and it's an indicator we may see some type of bullish activity. And, last time we had this setup, all right, there's still maybe more consolidation due to come, but we did see a strong push up, in this ratio chart the last time we had a very similar setup. So, financials are definitely something that I'm looking at right now. We also have XLE versus XLK. So this is going to be your energy versus tech. And, I did a lot of videos on energy earlier in this year. And really last year. And this is something that I've been kind of just waiting to form out, right? A possible theory that I had that we were getting this massive cup, right? This looked like a big, massive cup that we had running into 2023, heading into 2023. And, I was thinking that, okay, well, we should be getting some type of a pullback if we can come down and test this zone, right? Prior resistance over here becomes new support over here and here. And now it's support again. Are we going to get a breakdown, or is this the handle that we've been looking for? And are we going to start to find some support and potentially rally back up, right? That's energy versus tech. Okay, if you see here, we're also getting, a little bit of these divergence signals here again, right? We're seeing, higher lows being put in on the RSI, higher lows being put in here on the MACD. Meanwhile, price action has continued to make these lower lows, and now we've found and come to our support range, and we're, testing these levels now. So it'll be really interesting to see what happens. When you look at energy versus the market and the XLE versus SPY chart, all right, we came up, we hit our wave 5 targets up here, all right, and, things worked out perfectly. And we're looking for a retracement here, which is what we got. All right, you can call this an ABC down, or you can call this a 1, 2, 3, 4, 5 correction. However you want to look at it. But to me, a lot of this is making sense, right? We have old support over here. Old support becomes new resistance right here, and then also right here. And our, old resistance over here, right, becomes new support here. And now we're looking to see, will this become support yet again? And will we get another push up for a larger 5-wave structure to take us to our overhead supply here from the 2017? That's definitely something that I think could happen. Again, we're seeing these divergences here. Okay, price action going lower, MACD going higher, RSI going higher, right? Making these higher lows. So lots of things behind the scenes are starting to set up and showing signs that we could be seeing some rotation in the market. It may just have to be until earnings is over, right? Or maybe earnings is that catalyst that propels things to, start rotating into either this energy sector or this financial sector. Now, here's TLT, okay? And TLT did get a nice bounce off of the last bullish divergence that we had, where we had these lower lows and we had these slightly higher lows here. But this 102.88 level has got some hands. Okay, it's been laying the smackdown on TLT, and you can see once we creeped up back to that level again, we got a huge drop down. Our MACD right here is starting to curl over to the downside. So we need to be real cautious right now, because typically this is known as a sell signal. Now, really, 99 has been a very strong support level. Basically, right in through here, has been super, super strong. And if we do end up breaking there, here is our targets. Okay. We have 98.15, 96.65, 94.73, and 92.30. Now, do I think we come down and hit all of those? I honestly don't, but I've been waiting for this gap right here to fill on TLT. There's a massive gap in between these two candlesticks. And that's going to take TLT down to 95. So it'll be really interesting to see if we break that 99 level, which it's not exactly 99, okay? But basically, if we flip 99 to resistance, I think that the odds are greatly increased that we're going to come down and fill this gap here around the $95 price level. We are trying to bounce near this initial bullish divergence trend line. So if we can get some follow through in the price action, that would be nice to see, but you want to be cautious of this breaking down, right? If we break that initial bullish divergence trend line, then that's when we're going to see a pretty significant drop here in TLT. You could say we have a little bit of a trend line right here, all right, that we had. We did break through our other trend line, so we broke through this one, and we were looking to see where are we going to flip it from resistance to support. And we tried to, right? I mean, we were bouncing on it 3-4 times here, but ultimately we had a look above and fail. And, those are typically pretty bearish. And you can see once we broke through that, we had a very bearish day in TLT, huge drop down. But that 99 level is really, really strong. And we saw some bounce back here in TLT. So, if you're bullish on this, essentially we would need to, come through here and break this trend line. We could say that we have an inverse bump and run pattern forming here on the daily time frame. I really like these bump and run patterns, whether it's an inverse or just a regular one. But essentially, you have your prevailing downtrend right here, and then you have the bump. That's what this trend line is. So these are really good patterns to trade, but you have to wait for confirmation, right? And the confirmation would be breaking through this trend line here. If we can break through this trend line here, then the bump and run should technically take us up to where the pattern began. That would put TLT right around that 103 to 104 price level. Okay, but as of now, we're still below this trend line here. And until we break through it, that pattern is not going to be confirmed at the moment. It's just something that we're going to be looking out for and watching potentially to see if it sets up and if it plays out. But right now, 99 is that really big level, guys. If we do get a move up, all right, we're going to have this trend line here that we need to pay attention to. That's going to be basically right around 100.5. Is going to be kind of like that key area. All right. You could say we have resistance here as well. So these are the main things I'm watching on TLT. Definitely want to be cautious though, because we do have this MACD rolling over, crossing to the downside. All right, we have this bullish divergence trend line here that we're just testing, and if we end up breaking through there and getting some follow through on the MACD, then we have 98.15, 96.65, and ultimately the gap fill at $95 is going to be where we're looking for the price to go on TLT. Now, don't forget, you can always email me for these personal coaching sessions, okay? Exactlytrades@gmail.com. Now, let's go ahead and actually use today's sponsor, Simply Wall Street, and dive a little bit deeper into some of the things that we talked about. So here we are on their website. And remember, there's a link in the description for a 14-day free trial and also up to 40% off if you guys do want to, get the paid version, get full access. With that discount, it makes it very affordable, less than $200 a year. Now, if we look at our current PE ratio, it's at 29.2, all right, and the 10-year average is at 26.9 times. So the market is a little bit frothy right now. It's not extremely frothy, okay, but we are above the 10-year average for our PE ratio. What's really nice is this chart right here. So we have earnings in green, then we have the total market cap, right, in red, and then we have revenue. And we can see that earnings has been on a decline, okay? And here, just in, basically the last little bit of the year, all right, basically like the beginning of the year, we're starting to finally see, an uptick in earnings, but the stock market has really just gone up a whole lot. Really since we've started to see that little bit of an increase in the earnings. When we take a look by market cap, we went from 43.1 trillion all the way up to 48.7 trillion. So, we're adding trillions of dollars, and earnings is going up, but it only went up by like 5 or 4%. Okay, so that's something, just a little bit interesting that I think is happening behind the scenes. We can actually dive further, and we talked about energy and financials. So let's go ahead to energy right here, and we can click on energy, and we can scroll back up, and we can see the PE ratio. All right, for the energy sector is about 8.8 times right now. All right, and we can take a look here and see that earnings, all right, unlike the S&P chart that we saw, earnings have been skyrocketing in the energy sector, right? We see this massive, massive increase in earnings, all right? It has started to roll over here recently, but the price and, essentially the market cap hasn't really gone up that much, right? It's gone up at a steady pace, but nothing like the earnings, right? So lots of energy sectors and companies in the energy sector have been reporting really, really good earnings, and we're seeing record-breaking earnings, but not much follow through in the price action. Price action more closely correlates with the total revenue. All right, so maybe that's something that you guys want to pay attention to in this earnings season. All right, now they also have lots of news platforms over here, and you can click on these and go over the related stocks that are relevant in that news. When we take a look at the current industry PE, investors are optimistic on the American energy industry and appear confident in long-term growth rates. The industry is trading at a PE ratio of 8.8x, which is higher than its 3-year average of 1.5. But the industry is trading to its close to its 3-year average price to sales ratio of 1.1 times. Now, total earnings for the industry have gone up over the last 3 years, and the industry is now profitable. Revenues have grown 24% per year. This means that more sales are being generated by the industry overall, and subsequently, profits are increasing too. Now, you can take a look at some of the different industry trends in here, all right, what investors are most optimistic about, some of the forecasted growth, and then you also have some of the top gainers and top losers in here, right? So, for instance, you could come here and we can click on ConocoPhillips, right, and it would give us a nice snowflake analysis here. You can see some of the different risks and rewards, and then you can come in here and actually dive deeper into the individual stock, see some of the related news. You can see the stock's price to earnings ratio, price to sales ratio. This is a new feature that they recently added. It shows how they make and spend money based on the latest reported earnings. I really like this. It's still in a beta, so we'll see how this develops in the future. But it does a really good job of, having their pros do the fundamental analysis for you, breaking things down, breaking stocks down, going over the peer averages, the industry averages, and it dives much deeper, right? You can even go into management, right? It's got a section on management, and you can see how the management is. They give the management a score as well. So I really, really like how they have basically all of this set up. You can see they get a 3 out of 4 on the criteria checks. Tells you who their CEO is, their total compensation, gives you management updates, lots of different things. You can see the compensation analysis. Really great platform, guys. So that's enough on Simply Wall Street. All right. Hopefully you guys enjoyed today's video. We broke down, what I thought was a really great analysis of the market and where money could potentially be flowing into in the, short to intermediate term future. If you guys enjoyed this video, smash that like button and subscribe to the channel. And don't forget, you can support the channel by using the link in the description below to go ahead and sign up for that Simply Wall Street. If you do choose to purchase, all right, you will get up to 40% off for the first 100 people that join.